Welcome to Common Sense Investing. My name is Cameron, and today I continue my journey in trying to find the next 10x penny stock. As always, I look forward to giving you introductions to good companies that also have the potential of being good stocks. Today I get to introduce and discuss some of the rewards and the risks of investing in Simply Solventless Concentrates, which is damn hard to say. Say that 10 times fast, right? Simply Solventless Concentrates. Simply Solventless I can't do it. So we, from now on, will be calling this company Hash, its ticker symbol. Hash is on a mission to provide pure, potent, terpene-rich, ready-to-consume cannabis products to discerning cannabis consumers. Our vision is to be the market leader in Canadian cannabis through the curation of exceptional, unique, and personalized cannabis journeys. Wait, though, stop, Cameron. This is a weed stock. I thought all those were terrible. Stay away. Don't cover any weed stocks. However, Hash could be a little bit different. Just looking at their summary, something that's important to them: 6 straight quarters of net income profit, no long-term debt, $7 million of actual revenue, 2024 projected annualized revenue $40 million, 2024 projected exit annualized net income of $6 million, which is fairly substantial for a company of this size. Pro forma adjusted EBITDA multiple of 1.5. The other thing backing up their information is their share price. Year to date up 137%. So one investing strategy that has proven to work in microcap stocks is a modified CAN-SLIM method. And one of the major parts of a modified CAN-SLIM strategy is to be a leader and not a laggard in your industry. In each industry, there are those that lead, providing great gains to shareholders, and those that lag behind, providing returns that are mediocre at best. The idea is to separate the contenders from the pretenders. And looking at this, it's suggestive that Hash is so far a leader and not a laggard. However, before I get to the financial numbers, please remember that I am not a financial advisor. I'm definitely not your financial advisor. This is not financial advice. This is just an introduction to a company that might also be a good stock. You need to go do independent research. Looking at the numbers, this company has shown significant improvement, especially the 12 months ended, comparing 2022 to 2023. The revenue has increased substantially. Even with this excise tax, the net revenue has more than doubled, going from less than $3 million to over $6 million. Their gross profit has gone from almost nothing to $3.4 million. Their income from operations has gone from negative $1.3 million to a positive $2 million. So that's a massive swing. And at the end of the day, they make good use of that, with their net and comprehensive income going from negative $1.6 million to a positive $1 million. So look, I'm shocked. I mean, for a cannabis company, this looks to be well run, and that has been one of the challenges with all these cannabis companies coming onto the stock market, is they were cannabis first and not business first. Hash looks to be different. These numbers have improved. Cash used in operations went from negative $408,000 of cash that they burned in the year 2023. This is the first quarter that I've seen them with positive cash. It's only $34,000, but they're making money. I always say you're looking for trends in microcaps. Is revenue trending up? Yes. Are earnings trending up? Yes. Is cash trending up? Yes. ROIC trending up? Didn't look. Valuation trending up? Obviously. So not a snapshot in time here for Hash, but their history has shown improvement. Can that continue into the future? The company will tell you it can, because they have agreed to acquire CanMarked. Now that isn't done, it's just an agreement to acquire, but this could potentially happen. And the resulting success this could bring to the company is huge. Remember, this is a company that reported less than $7 million of revenue in 2023. They're talking about acquiring $20 million of revenue. Some of these projected charts here are talking about Q4 2024 projected revenue of $40 million. If Hash can achieve that, that would be a massive acquisition. The financing was already closed July 17th as they closed their oversubscribed financing for gross proceeds of $3.85 million, on the hopes that this company can continue its improvement, continue its proper management of the company, and get this deal closed. Go take a look at this acquisition deal, decide if this company is for you or not. Because it's never wise to throw a stock into the garbage just because of its industry sector. There is change in the industry, and there's potential to maybe make money in the future. What do you think of Hash v Simply Solventless? You've been watching Common Sense Investing. My name is Cameron. Thank you for your time.